Good morning, Scott, and welcome to Be or Not to Be, from blockchain to Bitcoin and everything in between. Great to see you. How are you?
Great to see you, Alison. Yeah, I'm doing very well, thank you. Hope you're well too.
Yeah, absolutely. Briefly after an accident that put me out of video time for a week or two, we're back now, and I really wanted to get your thoughts on where you stand on blockchain to Bitcoin and how you define crypto. So, general question at first, but how do you define crypto?
Define crypto. Well, I'm always very cautious of defining it and discussing it depending on the stage of the person I'm speaking to is at in their journey. If someone's got a light amount of experience or understanding of the asset class of Bitcoin and they're talking about crypto or they're coming into the space, then the way I would usually define it is very binary to help them get on the journey and focus on what I believe they should focus on first, which is the difference between Bitcoin and fiat money, which is pounds, dollars and euros, and your typical government mandated legal currencies. Defining the difference between those and probably using Bitcoin as a comparison to gold and kind of positioning it as gold is an analog instrument, it's a metal, defining the differences with Bitcoin being a digital asset and the characteristics that allows it to have. But once I've gone through that conversation, I do usually round off with my opinion on what the difference is between Bitcoin, crypto, blockchain. And the biggest problem in the world is store of value for people who are poor, or people who are middle class, or people who are rich, and also for people who are in great countries and people who are in countries that are oppressive or countries that are suffering difficulties from war, for example. And fiat currency, pounds, dollars, euros, is a product of human history, but effectively it's centrally controlled, and a central bank, a private bank, a government can influence or increase themselves the amount of pounds, dollars and euros in circulation. And what that does is reduce the value of the money that's already in existence. So it affects the people who are already holding it, saving it or being paid in it. So with fiat, US dollars, pounds and euros, a central entity can increase the supply and confiscate the supply and control whether you can send it. With Bitcoin, it's limited in supply, you can send it without any permission and nobody can confiscate it from you. And that has no central entity and no issuer of Bitcoin. So when you look at crypto, anybody can start a crypto, whether they're in their bedroom and they're marketing it on social media, whether it's a venture capital fund who are saying we've started a crypto, it has some utility value, so it's going to be worth more in the future. Or even recently, a president of one of the world's leading countries started their own crypto in their own name. And the crypto, anybody who starts that crypto can control it, can print more, and effectively most of the use case that they're looking at, whether they would say it or not, is to increase the price to make people buy it for them to effectively make money. So fiat, a central entity can increase the supply. Bitcoin, nobody can increase the supply. Crypto, anyone can increase the supply.
That is, to me, a fantastic and really worthwhile definition, because you've really pointed out the distinction between Bitcoin and every other cryptocurrency. So if I said there's a spectrum of the currencies and crypto and Bitcoin, am I right in saying you're firmly on the side of Bitcoin?
I am. I think Bitcoin can solve, like I say, store of value. Yes, it can also do medium of exchange, and yes, it can also be the currency that you denominate in. But right now, over the next 10 years, the main use case for Bitcoin that I see is solving the store of value issue for 8 billion people on the planet and however many millions of companies on the planet.
Yeah.
And that's why I'm so passionate about that asset class, because fiat or crypto do not solve that issue. And I think the way it gets conflated in the media and the way it gets used interchangeably by some of the large institutions is what stands in the way of people studying Bitcoin and understanding Bitcoin and considering whether they want to adopt Bitcoin or not. And that's just like, I always say, like, match your allocation to your conviction. So if somebody comes into it and they're like, okay, Bitcoin's what I'm focused on, I'm studying it, okay, I'm getting my head around it, I'm starting to understand it, but I'm 1% of the way there, I'm 5% of the way there, then they can begin buying 5% or 1% of their monthly savings into Bitcoin. And if they're just doing 1% a month for 12 months and studying it, they might decide to increase that allocation. And I think it's just important to help educate, because there is no CEO of Bitcoin, there's no marketing department, there's no PR department.
Yeah.
But the use case is very little understood.
And again, it's another distinction how Bitcoin is decentralized. So all of us have to learn at our own pace. And one of the things that I wanted to ask you as well, and you've got such good, strong conviction in Bitcoin, is how you came into the space. What was the trigger, or what was the point where you started to hear or wanted to learn about Bitcoin?
If I summarise where I am now and then where the business started, because I mean, you could talk for a long time about where the triggers start and where the foundations are built. But right now, I'm the CEO and founder of a business called XCE Connecting Excellence Group that's recently publicly listed. And the business behind me, Spencer Riley, is our flagship operating business and an international executive recruitment firm. Now, that was set up in 2014. I discovered Bitcoin in 2016. And on that journey over the last 12 years, we've got to a point where we are today. And today, we are an operating business that's an international executive recruitment company, placing with PwC and Deloitte, the Big Four, big business consulting and advisory firms around the world, logistics firms, construction firms. So the majority uncorrelated to Bitcoin, although we do place Bitcoiners as well. But we're combining an operating business that's people-based and service-based. And the assets and the value in that operating business are the people. We're combining that kind of business with an active balance sheet strategy that is focused on acquiring Bitcoin, and then using the capital markets to increase the value, the amount of Bitcoin that we hold. But using the strength of the balance sheet to say, okay, the PLC status now allows us to offer performance-based share options to attract talent into the business, drive more revenues into the business, and thus also strengthen the balance sheet. Now, how did I get to there? Well, the last 4 years, 2021, I took the decision to move the private business's balance sheet onto a Bitcoin standard, and that all surplus cash would be held in Bitcoin as a long-term treasury asset. Long-term meaning ideally forever and still holding when I'm not here, because I believe you'll be able to use it as collateral in the future. When I started doing that in 2021, there was an 80% drawdown in the price, and I was buying every day, every week throughout that period, and just dollar cost averaging is how you would term it in. And then as it came back up, we were outperforming what we would have done if we'd have been investing in gold, which is very difficult to do as a private business that's people-based, never mind a public one. And we were performing better than we would have done if we'd have invested in property or if we'd have invested in an index-linked fund. But it did take a lot of conviction to buy as the price of an asset went down 80% and keep acquiring more. While the revenues of the business were going up, the balance sheet asset that we're holding was going down, and we were buying more of it. It was a tough conversation with the management accountants to get them to become on board with the strategy and understand why I was doing it. Yeah. But I didn't have to ask their permission. So that conviction was built from before I set Spencer Riley up in 2014, growing up and just intuitively feeling the effects of debasement and inflation and spotting how to solve the problem. So when I was 13 years old, I convinced my mum to go to a property conference. And my idea at that age was my mum's got a hairdressers, my dad's an engineer, we live a good middle class kind of, or working class stroke middle class kind of lifestyle in the northwest of England, but everybody I'm seeing around the local town and the local area, anybody who's successful is switching their cash, which is, I'm not thinking at the time going down in value, but switching their cash into deposits for houses, buying the houses and renting the houses out, and then using the remortgaging to release some equity, buy more property. But I was only just starting high school when I was seeing that, and I became quite obsessed with it. But what I hadn't realised until I got to the point where I set Spencer Riley up in 2014, started building a business and building a cash reserve. I was building a cash reserve to protect the business should there be an economic downturn, and so I could pay the staff's wages. And it was at that point I realised that it's not the properties that are going up in value over 5 to 10 years. It's the money that's going down in value. And I started to realise that at the same time, 2016, when I'm building a cash reserve, and somebody introduced me to Bitcoin. And the three aspects, I'm one of them people who tends to trust first and then verify later. So when somebody who I trusted said, Bitcoin's got a maximum of 21 million could ever be in existence, you can send it anywhere and it can't be confiscated, I said, okay, well, if those three things are true, then people who want to move assets across countries are going to need to use this Bitcoin. People who want to make sure that their wealth can't be confiscated are going to use Bitcoin. And I'm thinking people who move their money to Switzerland, people who move from one country to Monaco, people who are such high-level individuals that you don't really meet or see. I'm thinking, surely the use case of this is for them guys. So I'll buy some and I'll start studying it. And over that 4-year period between 2016 and 2020, went through a phase where the price went right up to £17,000. And when it went to £17,000 a coin, I remember sitting at a lunch before Christmas, a sort of business networking lunch at a sports club in the Northwest, a rugby league club. And one person also owned Bitcoin there. And we were both sat there as if we have cracked the code. We know exactly what is going to happen in the future. Bitcoin's incredible, but we didn't really know enough about it and didn't understand all the other second order effects of Bitcoin, other than the price went up when you bought it, and it will go up forever in our eyes at that stage. And then it came crashing back down. And I remember one Christmas it was at 5,000 and I remember thinking to myself, this is an incredible technology. I've done as much studying as I could find good material on at the time, which didn't get that deep, probably scratched 10 to 20% of the surface. And I'm thinking, this is an incredible technology, but it's going to take years for people to really understand it, because I've come across it by sheer luck that someone's mentioned it to me, and then I've done a bit of digging. And the only reason I've done that digging is because in my personal life, I'm trying to strengthen my balance sheet. 2016, May of, I don't think I'd bought my first house. I was in my mid-20s.
Yeah.
And the leap between getting your first house and being able to find a savings account that goes up in value is quite colossal, and it's getting bigger and bigger and bigger for people. So I'd been lucky that I was in a situation where I had a personal desire to find stores of value and a history where I'd been quite obsessed with, okay, how do you preserve value and buy property and build portfolios? And then there was this alternative option. But I was also running a business that was people-based, generated cash, and couldn't tie that cash up. So you couldn't lock the cash into a property and then 3 months' time find out that the billings had dropped off and you needed to pay wages, and you can't sell the property and you can't loan against the property and you can't divide the property into little pieces and sell a bit of it. So I'd started thinking, if I strengthen my personal balance sheet from 2016 to 2020, my thesis is right that this will go up, then that will protect the business, because I'll be in a better position as a business owner to be able to lend back to my own business and all that kind of stuff. And then, but I wasn't fully allocated. I wasn't sort of how I am now. And then we got to 2020 and I'd moved the office from another town into the city where we're based now in Leeds. Now, I believe this is an international hub for executive recruiters. There's about 40 companies within a 1 to 2 mile radius here who do exactly what we do. And I brought it here to attract talent, to generate more revenue, generate more profit, generate more cash, and build on a scalable platform. The week after we moved into this office here, COVID lockdown hit. And we'd seen that coming months before, because we'd had clients who were interviewing managing directors at final stage, cancelling interviews in Europe and saying you can't fly into our country in January and February. So I was thinking this is actually going to be serious so I'd had a bit of an idea of what was coming. And then when COVID hit, I immediately thought, okay, we're in a good position here because I do have the cash reserve. We've moved into a new office. I'd actually agreed a long rent-free period to take the lease. Wow. So I thought this is an opportunity for me to actually gain some very talented staff who I wouldn't usually have access to from our competitors. And within a week, the governments in the UK, governments around the world, all announced pretty simultaneously that they were going to print money indefinitely to pay people to stay at home. And that signalled to me that we will never have another Lehman Brothers style economic collapse without significant money printing and human intervention in lowering the interest rates and making sure that we, rather than have an immediate economic shock like the Lehman Brothers shock, we have a protracted, drawn-out inflation that tries to manage the shock. So when they started printing money without any real productivity at the other end of the money printing, I became a maximalist, if you like, and started allocating my personal money into either Bitcoin or proxies of Bitcoin. Yeah. And in the UK, shortly after, you could get access to MicroStrategy shares, who were a public company in the USA that began a proactive Bitcoin balance sheet strategy. They're now called Strategy. They're now holding 700,000 Bitcoin. I attended their Las Vegas conference a couple of weeks ago, met them and Morgan Stanley, there was Citibank there, Barclays Bank. Over 5 years, they've grown into, as you obviously know, Alison, grown into what is effectively a digital capital, digital credit machine backed by Bitcoin. I allocated anything that was in trapped tax wrappers like ISAs and SIPs to that kind of investment. And I'd already bought the Bitcoin ETN in 2017 with my tax trap capital in the ISA and the SIP. So as soon as I saw him do that, it was a green light for me to, I've got to do this for the future of the business. I think it's the best decision to make on behalf of the staff, best decision to make on behalf of the business. And I'm not quite sure in 2021 how I will use it, but I just knew that the best idea right now is to act and start building a Bitcoin balance sheet and denominate the balance sheet in Bitcoin. So it was throughout that period there, I'd gone through a personal cycle of ups and downs. I'd gone through personal events, and I'd seen macro events, and the solution to those being money printing, and then I'd allocated to the business and committed to the business. And I knew that if I started, regardless of what happened within the first 4 years, whether the price of Bitcoin went up or down, I would be buying consistently through that 4 years, and that it would be in a better place at the end of that process. Now, the price isn't too dissimilar to how it was right then, but when we came to IPO on December the 11th, we had 120% return on the Bitcoin we'd been buying over the 4 years, even though the prices aren't too dissimilar, because we bought all the way down and all the way back up to the same price. So that conviction's just been built through, I think Bitcoiners would probably say, real proof of work. 4 years personally, 4 years as a business owner, and I think it's a topic that once you start studying, it's hard to stop.
Becomes addictive.
Yeah, I think it's because it touches so many wide-ranging topics. And VJ Selvin, one of our non-exec directors, he was head of governance at Goldman Sachs, and he's now with a digital asset exchange that's NASDAQ listed, a non-exec director with us. VJ was on the calls with Ben Bernanke back after the Lehman Brothers collapse and saw the money printing at the coalface, and the solution that they were providing, and that turned him into what people would call a gold bug, somebody who is a real advocate for gold. And I think gold's incredible. 1,000-year history as a store of value for humankind is the best, hardest money that we've had throughout that period. I think Bitcoin is significantly better. I would say somewhat, you could infinitely say it's better in that it can be transported from here to anywhere, it can be divided, it can be verified, and it can be used as collateral for financial products. But yeah, VJ Selvin became a gold bug, and then I think his conviction built, and he wrote a book called Principles of Bitcoin, and near the start of the book he talks about, I can't remember what the old sort of story is behind it, but if there's a number of people next to an elephant who are blindfolded and they're trying to describe what it is, and you know, one of them might be like it's leather, or one of them might be like it's this, or one of them might describe it as something else. And when you look at Bitcoin, depending on what angle you're looking at it from, it can be a million different things. And that's why I think people study it for so long, is if you're in a country that's oppressive or restrictive on finances and capital, and what will allow you to leave the country with capital, they've got capital controls, and Bitcoin's something you can buy that day, take across the border, and then use in another country. And it's a lifeline in that it doesn't matter what the price is the day before and the day after, it might be the exact same, but it allows you to move the money and escape a country. And for somebody who's working overseas and trying to send small amounts of money back to their family, it's the ability to send money for free, permissionless and instantly. And for somebody who's running a business who's watching a cash reserve devalue by between 5 to 10% a year on year, and that's the right thing to do, save up your cash, keep it in a savings account, it's the ability to make your balance sheet come alive, have some hope, and have the expectation and the opportunity to lock in value in the balance sheet, especially for a business like ours that's reliant on the people and the skills and their time and energy to lock in that value over the next 5, 10, 15, 20, 50 years. Wow.
Because I think you've touched on so many things that it makes the case for Bitcoin far more clear than, as you say, not just those very high net worth individuals who can afford to take the, if you like, the bet or the risk because they've got that disposable income, that it is for everybody. And that no matter where you are in society, whether you're working or whether you're suppressed, whether you have a bank account or not, Bitcoin can work for those people. So again, to me, what you've described is a masterclass in how does Bitcoin work for your business, for you as an individual, for you as a community, for you as a country. So, you know, that to me, that was a great roundup of how Bitcoin operates, and really shows your conviction as well. So thank you so much for that. I really feel like I've learned something as well. But also, and this is for perhaps another session, is because of your entrepreneurial spirit and your mindset that you can see opportunities and you take them and you don't ask for permission, which again is Bitcoin, but that you've got that focus on the operating business as well. And that was where I was really fascinated to find out of the future of recruitment and the types of jobs that are available, and why you see the connect from Bitcoin into the future of jobs and where that's leading.
This podcast is for information and entertainment purposes only and does not constitute financial, investment, legal, tax, or any other form of professional advice. Nothing in this episode, or any other, should be taken as a recommendation, endorsement, or invitation to buy, sell, or hold any cryptocurrency, tokenized asset, or other investment, or to engage in any specific strategy. Views expressed by the hosts and guests are personal opinions only and do not represent the views of any organizations they are affiliated with. The content may be inaccurate, incomplete, or become outdated at any time, and no liability is accepted for any loss or damage arising from reliance on it. Listeners should always do their own research and seek advice from an appropriately regulated professional before making any financial decisions.